What is good, NIO family? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only NIO stock and what you should be looking out for the future. I'm also going to do some in-depth technical analysis and give you guys my price prediction for tomorrow based off what the chart is showing us and based off what the data suggests. I'm also going to talk about the PCE report that came out and how this can affect the market and NIO going forward, what the news is saying about NIO, as we do have one bullish piece of news that came out, and also what NIO put on their Twitter page, which is once again very, very bullish based off what they're saying, despite the red we may see in the markets for the next couple of trading days. Now, before I break any of this down and get into any more details, I do have to mention a couple of things real quick. Firstly, I'm not a financial planner. Don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, but benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed 6 free stocks, each worth up to $2,000. And you can always sell these 6 free stocks for cash and use that cash to buy some NIO shares for free in this limited time offer that ends today. So this is your last day to get those 6 free stocks. Please check it out before they run out. It is free money. With that out of the way, let's get on with the video. So when it comes to NIO share price, there is something very important I want to talk about, but that can definitely affect our economy, and that's the latest PCE inflationary report. So I did talk about how significant this would be for our economy, and this was somewhat good news that actually ended up coming out because the numbers were a little bit lower than some of the forecasts ended up predicting. So if I actually go to investing.com first, you could see right over here, there's been this declining trend in the core PCE report, and you could see the forecast showed a 4.8% inflation rate, but then it actually came out at 4.7%. That is not putting much weight on gasoline, other energy sectors, and food. Now, if you do put weight on food and energy and other things like that, that's when you're going to get the other rates that they basically come to show, or the pure PCE numbers, and that's going to give you a 6.3%, which is a little bit lower than estimates as well, which is a good sign because we are starting to see inflation kind of cool off, at least as of right now. So this could be promising for the future, but this didn't necessarily impress the markets that much because I think that we did push up a little bit going into last week, and the markets are now still pushing down despite that. So theoretically, in a normal market, the market should have actually seen a little bit of relief because of this, but that's not what's happening because of the setups. And it does look like, from a technical perspective, we may see a little bit more bearish momentum, considering that not even this news could push us up. Because imagine if the report came out and it was actually bad, the market probably would have crashed really hard if that was the case. And we had a pretty decent report, in fact, showing some declines in inflation, and yet the market was still a little bit red. So that's very, very interesting. If you look at the SPY, it was down about 0.81%. And there is something I want to actually call out that may not be too, how should I say, comforting for a lot of you guys, but if you actually look at the chart, it does resemble a head and shoulders. Now, if you don't know what that looks like, this is what it would look like. Obviously, you have the left shoulder, the head, then the right shoulder, and you have the neckline kind of like right about here where that support zone is. And this is what the chart ends up doing. It forms this, the extra shoulder followed by some drop or red after that, and that is essentially what I think the chart is going to do. We got to push up. We got the first shoulder that formed right here, then we pushed up to the head. It looks like that right here, and now the next shoulder is forming, which is why this SPY appears to be channeling in this range, and it does look like it might actually break to the downside and fill the gap down to that 367 range. So the SPY is looking kind of bearish. It's just plain and simple. That's the easiest way for me to put it that way. And the reason why I'm talking about the SPY is because the market has a tendency of running in such a collective manner, meaning the SPY and the NASDAQ are so correlated. Look at the NASDAQ, very, very similar as well. We have another head and shoulders forming. We got the first shoulder right here on the left side. We got the head right over here, and we're starting to form this other shoulder. Now, it is possible. One thing that's a little different is the NASDAQ could push up a little bit for a little bit more time before it drops. But at the end of the day, it does look like it's heading in this direction. That's where the gap is at around 10,841. That's probably going to push us down a little bit more. And a lot of these tech stocks, including NIO, are probably going to end up tracking them because you could see NIO is so correlated with them. Look at how similar NIO was moving, relative to them. You could see NIO had this left shoulder. NIO has the head. They formed another shoulder. And now we do appear like we're going to start dropping relatively soon. So where may we end up going sometime next week? And that is this gap down here. NIO happens to have a gap that would take it down to about $19 and was at $19 and like 18 cents, 19 cents, something like that. So $19 is where NIO may be headed in the near term future. We obviously filled the gap down here when I called it. I mentioned to you guys that I did see this gap getting filled 2 days ago. That is what ended up happening. And now I am seeing the $19 gap getting filled being a lot more likely. But I don't think we're just going to go to 19 tomorrow or immediately. It's going to take a little bit of time. And right now, NIO is going to be testing that 20.86 range. I think the real support is maybe a little lower than that, maybe like 20.8 around there. That's our support zone. I do think NIO is going to be testing that for quite a bit of time tomorrow, and it might not hold us. And if we can't hold that, we're going to head back down to that 20. So it's very possible for NIO to start testing those lower ranges. I think 20.8 is going to be the key zone. We might bounce off of that for parts of tomorrow, but overall, I do see another potential red day coming for the markets, as the markets are kind of apprehensive with all the things that are coming out from the Fed to a potential recession being announced, and also a lot of these earnings reports that are coming out. Let me just show you this right here on Earnings Whisper before I show you my price prediction for NIO. Just remember, for July, we have a ton of earnings coming out for Tesla, for lots of tech stocks out there. I mean, we just had Walgreens. We have all of these different earnings reports coming out for the first like 3 weeks or so of July, even some near the very end. So tons of earnings are coming out. We're going to want to see how the markets are responding. Are companies still doing well? Are they holding up well? And when big stocks, big giants out there like Google, Apple, Tesla start doing their earnings reports, when they report them, it can move the entire market in a huge way, because those are the giants, the mega caps that could really shake us. Now, what does this mean for NIO? That is going to depend on how on earth these earnings go. But for tomorrow in particular, I am a little bit bearish. I do think we're going to test that 20.8 range again. And I do think it's very possible for us to close in the red. Now, just to show you what it could look like, let me just kind of help you visualize the price action. Just like this. I'm trying to find where, hold on one second. Yeah, the close would be like just about here. So what NIO could do tomorrow, just to warn you, is tomorrow when the market opens, we've been seeing these big drops near open. NIO could drop to that 20.8 range down here. I'm hoping we get a bounce off of it. If not, we would continue to drop to about 20. But I do think we're most likely going to see a bit of a bounce. I don't think we're just going to drop that hard. And it is possible, but we might see just price action like this, just sideways, choppy price action, maybe a boring day for tomorrow. And we may close around the low 21 range, maybe at 21 flat. So that's essentially how I'm seeing it playing out for tomorrow. I am more bearish than bullish. And I do think that red is just more imminent for the near term. Now, even if the market does somehow turn green tomorrow, that doesn't mean that there is not going to be more downside. As I showed you guys before, we have this inverse head and shoulders forming on the SPY, just like this. Let me use the 2 hours just to make this more clear. Yep, we have this inverse head and shoulders forming on, not inverse, I'm sorry, a head and shoulders. That's not an inverse. A typical head and shoulders forming on the SPY is probably going to cause this thing to drop even lower. We do have a gap down there, so I just see that being more probable. I do think it's most likely going to come going into next week, or at least a part of next week. But after that, I do anticipate a nice bounce should come after. So hopefully by the second week of July, the market starts to kind of push up a little bit, and that may push NIO right back up as well. So for NIO, short term, yes, I do think a red day will come tomorrow. We may end up dropping as low as $19 sometime next week, but then we should get a bounce and start pushing right back up to the 20s if the market allows it. And that is what seems very probable. Now, when it comes to the news and what they're reporting, we're seeing this piece of news coming out from Seeking Alpha that stated that NIO is going to rally in the near term, according to Morgan Stanley. Once again, a bullish indication. Morgan Stanley is very bullish for NIO, and NIO is set for some big moves for the long term. I'm not quite sure if I could really promise you it's going to rally in the near term, but it is a possibility, and Morgan Stanley saying that could be good news. So I just wanted to put that out there. But overall, like I said before, I'm still very bullish for the long term. I do see NIO making a comeback and breaking all-time highs again, and it's not the end of the world. The last thing I wanted to talk about is this right here. NIO has turned battery swapping into a luxurious service, according to SAIS Hopkins and many other big articles. And we're seeing that they stated that instead of purchasing batteries, more than 60% of NIO drivers in China use its battery as a service leasing program. So it's very popular in China, the biggest EV sector in the world right now. And I do see NIO just expanding as time goes on. So short term, yes, a little bit bearish. It might drop a little bit. Long term, I'm still incredibly bullish. So it's not the end of the world. We're still in this rally that's kind of bearish. So just kind of deal with it, just hold on tight. And in the future, I see lots of green to come for NIO. So stay strong, be safe, and I'll definitely see you guys in the next one. NIO to the moon, and peace out.